Hello traders, you're welcome to the week just ended series or episode one of the series. In these episodes, we are going to be looking at the interaction on the lower time frame for the week just ended. Uh, the intention is to try as much as possible to explain to some of us how we can actually read price action on the charts, especially when we switch to lower time frames. So what we have now is the weekly time frame of Euro USD, and for this particular week just ended, we have this bullish candle. So which means that this particular week just ended was actually bullish. So I most likely going to be starting with the weekly time frame, then scale down to the daily time frame, and then to lower time frames. So I am now going to switch to the daily time frame. And what can we identify on the daily time frame? First of all, we can see clearly that the market is bearish. Okay, market is bearish. And after that, we can identify the most recent bearish break of structure, right? After that, we actually have a pullback here, and so we have a range. We can draw our range from this point to this low, and we can see clearly the price is actually reacting from premium, which is very good. But what we expected to see is for this high to take to take this to take out this low, or to create a lower low. But this is not what is happening at the moment because we started seeing pullback. So when we start seeing pullback like this, we expected this lower high to trade below this low, and it's not doing that, then it means that most likely this is a weak high. Okay, this is a weak high, and we expect the market to trade through that high. So invariably, that is actually a liquidity inducement, and most likely it is inducing this particular point of interest here, inducing this particular point of interest. So most likely we see price react from that point of interest. Okay, then if you look very closely, this particular point of interest is not so safe because it is resting on this imbalance. As you can see, it's resting on this imbalance. Okay, this is imbalance field, imbalance open. Okay, so it's resting on this imbalance field. Okay, all right. So it's kind of risky to me. So what I would expect going into next week is to see price rally into this imbalance before coming down to break this particular structure for continuation downwards. Okay, so with that said, we can now switch to the 1 hour time frame, which is a lower time frame, to see how price actually interacted during this week just ended. So now we are on the 1 hour time frame, as you can see. So the week just ended, started from Monday's price action. But before then, it's important for us to see something that happened on Thursday. We have this manipulation, have this very nice manipulation, and then what do we have? The break of the structure, which is very interesting. All right. So after having the manipulation and the break of structure, we have actually created a trading range when we start having this pullback. So it's going to be our trading range from this point to that point. And you can notice that price was actually reacting from discount, which is good for us at least to take a buy, and we would have captured this move. But then if you look closely, you would notice that something happened on Friday. On Friday, we happened to record the low of the week, and what was price actually seeking at this point in time? You will notice that we have an imbalance here. Okay, price was actually seeking to fill this imbalance, and it filled it more than 50% of the imbalance of the fair value gap before we have this reaction. Okay, so that's what price actually sought to fill the imbalance that was existing here, and with that, we find price taking these lows, all these lows before Friday, okay, of this week. Now, if you look at Monday's price action, for you to understand it very well, or we can just use the 1 hour time frame. If you look at Monday's price action, the Monday price action started here, and we have this Asian range. And you can see that manipulated this Asian range. Price manipulated this Asian range, and then what happened? Break structure upwards, and then what happened? We now wait for the mitigation of this block. These are all liquidity inducements. Okay, we wait for mitigation. If you draw your Fibonacci, you see that price was actually trading from discount, which was very good. So if you are traded from here, all right, let's say this is the inducement you used into this point of interest, and you are taking your trade from here, this is what you would have gotten. Not a bad trade, but 17 pips stop loss, and then you would have targeted first of all this high, which is quite not a bad trade. So that was what happened on Monday, which was a very good opportunity. Okay, still based on the fact that price was reacting from this discount of Thursday's price action. Now on Tuesday, what happened? On Tuesday, um, in the London King Zone session, in the London King Zone, we have this manipulation happening here, and then this was our target. I'll let this scale down to the 50 minutes so that it will be more interesting. So we're looking at Tuesday's price action, which we get here, which we have here. You can see this manipulation by this candle. And once we have this manipulation, what are we waiting for? We are actually waiting for price to actually take this target. First of all, buy side liquidity grab, then we expect the sell side liquidity to be grabbed as well. So another great opportunity of Tuesday trading. And if you did not enter here, you could have also waited for this opportunity because we have um, a range here already. We have this range and this is already premium. And apart from that, you could notice that we have um, fair value gap here, fair value gap at this point too. There is fair value gap, which price can actually trade into, and that's exactly what price did. Trade into the fair value gap. If you go to the 5 minutes time frame to make it clearer, okay, we are looking at Tuesday. We are looking at Tuesday's price action. Tuesday price action. Tuesday, okay, this is what we're talking about. All right. So on Tuesday price action, what we saw, this imbalance is actually now at this point. It's a very tiny one now. Okay. Several ways you could have entered. Let's say you're looking at this imbalance, you know, and this imbalance candle, you could have, you know, entered here if possible, something like this, maybe from the beginning of the imbalance and down to the imbalance candle, and if you are cutting something nice, targeting this Asian low that is here, all right. Or you could notice that um we actually have this zone here, this zone we have this zone that has not been mitigated, okay. And what you could have done is to say, okay, this is the um, liquidity inducement of that zone. Just to make sure that you are in the trade, you could have entered from this um, high, you just stop loss above the zone, something like that, and then you target this Asian low. It will give you almost the same trade as well. All right, so that's what we have. If you also wanted to use confirmation entry, you would have still gotten a good trade on Tuesday. So great opportunity on Tuesday, great opportunity on Tuesday. But see what happened after clearing this low. You would have expected market to do what? To respect this high and then continue downwards. That wasn't the case. We see that in the New York key zone, we had a manipulation of the London high during the New York key zone. Sorry about that. We have this manipulation of this. Sorry, sorry about this. We have manipulation of this high. Okay, you see New York trading above and closing below using this candle, and then something might be responsible for that. Okay, maybe this zone that is here was responsible for that. Okay, we have this zone. It will be so clear here. So if you scale down to the 15 minutes, let's see. I think we have a clearer view here. Okay, so we have this zone here on 15 minutes. Oh, sorry. We have this zone on 15 minutes. This demand zone. That most likely is where price reacted from to give us this move. And now this was a supply and this was a demand. Now demand has overpowered supply. So what do we expect? We expect a mitigation of this zone, of this leg, of this demand. Okay, this demand is a full demand, as you can see, full, the full order block. The down close candle. All right. Now we expect a mitigation of this order block, and these are liquidity inducements. So we could have also taken trade here if possible, and then try to do what? To target that. But you can see that this low, this low could not create a higher high. What I mean is you see price doing this, and this low could not break this high. Instead, it created something like that. Okay. So once this low could not create a higher high, and we now have a change of character here, it suggests to me most likely that this is a weak low. This is a weak low, and it's actually going to be wrong or swept. That's exactly what price did. So when price swept this, and eventually price violated this demand, then it's clear to me that we are in a bearish environment. Okay, so by this time we're already in on Wednesday price action, and you can see what happened in the London Q zone. We have this move, after the break of the structure, we have this range structure forming. Okay, after the break, we have this range structure forming, and we have this liquidity. If you go to 5 minutes, just Wednesday price action, it will be, I believe, it will be clearer on Wednesday price action. Okay, so we did have this range structure forming, and then we have this zone that wasn't mitigated yet. Okay, that is where price actually reacted from, using this as liquidity inducement, and price reacted from there, and going up to the 50 minutes once again. So what did you notice? What happened on Thursday? What happened on Thursday? After the break of this low, this becomes a strong high, and we have a retracement. See, after the break of this low, we have this pullback here, and you can see that this pullback did not quite get to the premium, so we are not ready to initiate sell. Then we had another pullback here. Once again, this pullback did not get to premium. In fact, it got to premium because this was a move that took us up to premium. And once we get to premium, what happened on Thursday? We are now at the premium from Wednesday. So what happened on Thursday? We saw this manipulation on during the New York key zone, price traded to true. But once again, see what is happening. This high could not create a lower low, could not break this low, and so we expect or we suspect that this is going to be a weak high for liquidity to be grabbed. And so that was what happened. When this happened, we validated this low. Okay, we validated this low, and from there, when I saw that we validated this low, okay, I started looking for opportunities to go short. Okay, and then after the break of this low, we have range structure. Look at it. We have something like this. We have a pullback here, shallow, never got to premium, here never got to premium, here also never get to premium. Then we have this. The mistake I made here was to say, okay, price is still at discount. I cannot sell. I was still looking for buys. And then I was taken out. I was taken out of the trade. I was taken out of the trade here. I lost here. So, like we said initially, price came to seek this imbalance before price eventually has now validated this high. So right now on Friday, this happened on Friday. So right now we are in the bullish environment. So what we are going to be waiting for is a retracement like so, then take price high. So that's the interaction between the days of the week. You can see how powerful knowing what the week candle can do and relating it with each day and within the lower time frame as well. So you could have taken several opportunities if you do understand this very well. If you do understand this very well, you would have taken nice opportunity here. For instance, if you happen to capture this particular trade, you know, which is not easy anyway. We could have by now gotten something very nice. This is what we're trying to see. So all of these things actually require um, serious training, serious training really. Because if you also look at this, when we try to find out why price reacted or rally up to this point, let's go to the 1 hour to see if we can get any reason why price did that. Okay, we actually have an imbalance here, but price still didn't get to the imbalance. Price still didn't get to the imbalance. We have an imbalance here. One might be thinking it's due to the imbalance. Price never got to. Let's go to 30 minutes to see. The imbalance is very clear there. The price never got to the imbalance. Okay, so that is what it is. You cannot get everything in the market. So thank you for your time, and if you find the content valuable, please like and subscribe, and I hope to see you again.